Hey everyone, you're watching my daily trade log. I document one of my option trades every single day for your benefit, and I am very close to completing 1 full year of documenting one trade a day that I did. And after I completed the full year, then I will share my results so you can see how my performance went, and hopefully it will inspire you to trade options if you're not trading options yet. Or if you're trading options and you're struggling, then hopefully it will help you to make the necessary adjustments so that you can become successful. So today is my trade number 244, and I traded Airbnb. Airbnb had earnings after the close today, and I sold a put calendar spread with $110 strike price. And if we take a look at, if we zoom into the daily chart, we can see that at the end of last week, the price dropped from about 120 and all the way down to below 110. So I thought that perhaps the price is gonna land around the $110 mark after the earnings, but unfortunately it doesn't seem like it's going to be the case because as we can see over here, the current price is just under 133, so I am a little bit far. So this is going to be a nice one, a nice little challenge to take care of. So what I did is I sold the 110 February 17 expiration on the put option, and I purchased the April 110 put option. So the trade cost me about $395, and the reason why I did that is because for the February expiration, as we can see over here, the volatility is quite high. Meanwhile, the April expiration, the volatility is 51.9. But unfortunately, because I know that the price moved against me, this is most likely not going to be a winner, but I can still make adjustments and hopefully only lose a little bit. However, the fact that after earnings the price jumped up doesn't mean that it's going to stay at that level. Last week or the week before, when Disney had earnings, Disney jumped up quite a fair bit, and then it actually went below. A few days later, it went below the price that it was at before earnings. So anything can happen in the market. I also wanted to talk to you about my Wayfair trade. This is a very interesting one because this is giving me a massive pain. Sometimes when you trade options, you do have situations where the stock moves against you, and it moves against you in a big way. So what I did is on the 20th of January, which was right here, 20th of January, we can see that the price was going up from about 30 for a couple of weeks, and then it hit 44, 45-ish, and then it dropped again below 40, and then it bounced back up and reached as high as almost 49. So at that point, I figured that, okay, if I sell a $60 call option against it, expiring before the next earnings, which is coming up shortly, then I should be very safe. So as you can see, the $60 strike is quite far from the level that where it was on the 20th of Jan. But then the following day, the following week, the craziness started and the price jumped all the way up to 59, and then it did not stop till reaching 74.25. So that was an insane move. So what I did is I needed to make some adjustments. I needed to make a few adjustments indeed. So on the 27th of January, which was right here, after seeing that the price is just not going to come back down, I decided to sell a $55 put option, and then I had to keep rolling that put option up to 60, and then just keep collecting additional premium. In the beginning of February, when it jumped from 66.51 all the way to 74, that's when I almost threw in the towel. So I moved my $60 put strike all the way up to 70. What I was hoping for is that the price eventually is going to come back down and it will stop or normalize somewhere between 70 and 60. That way, I only would have lost about $2.50 because I collected $7.49 credit during this crazy period. But the current price is actually below 50, so this is very heavily in the negative for me, and it will take some time for me to recover from this. But sometimes you just gotta make a decision whether you wanna keep fighting or you just wanna swallow the loss and redeploy your capital somewhere else. So the earnings is coming up on the 23rd of February next week, and I'm still on the February expiration, so I can choose to roll to, let's say, March. So currently I have the $70 put, so I would need to buy that back. I have the $60 call, and if I wanted to roll to, let's say, March, then I would probably go for a $60 call again and perhaps sell the $65, and that would cost me a bit of debit, or maybe even I can go all the way to 60 and that will cost me $5 debit. But because I have $7.49 in this trade, I will still be in the positive, and that's probably what I will do, and hope that the price is going to stabilize around the $60 mark. So sometimes you do get trades like this. Sometimes the market or particular stocks are just not going to work in your favor, and you just have to fight until you feel comfortable fighting. And that's part of the game. That's part of options trading. You can't avoid it. It takes many trades to build up a nice portfolio, but it takes only 1 or 2 trades to wipe out a big portion of your gains, of your wins. So just keep that in mind. That's why it's always best to trade small and trade frequently. I'm going to wrap it up for today. Once again, at the end of this week, I will complete my full 12-month cycle of daily trade logs, and I will share my results next week. It will be quite exciting, so keep tuning in, and I'll see you on the next video. Thank you for watching.